Everyone loves a good shortcut. So why take the long route to build business credit and you can take the shortcut route to build business credit? In this video, I'm going to tell you how you can take the shortcut route to build business credit fast. But before we get into that, I want to talk about the traditional route, aka the long route to build business credit. Then we're going to transition to the shortcut route. Then I'm going to let you decide which route best fits your business model. All right, so let's jump right into it. Now, in order for you to effectively build business credit, you have to make sure that you properly structure your business. Most businesses walk into banks, walk into these financial institutions, and they get turned down immediately when they fill out that business credit application because their business is not properly structured. I can't stress this enough. Now, I'm not going to go over every little detail on how to properly structure your business. You can watch my other YouTube videos for that, or you can join my private community to get more in depth on how to properly structure your business. So I'm going to give you 3 takeaways on how to properly structure your business. Number 1, make sure you choose the right business name. Super important. Choose the right business name. Something vague: management, enterprises, consulting, etc. I don't care what industry you're in. Number 2, we want to make sure we choose the right NAICS code. I call it NAICS code for short. So choosing this code can affect your business in multiple ways. Number 1, it can affect your contracts if you're looking to get any type of contracts from the government. Number 2, also it can affect your terms and your limits, such as your business credit card limits between you getting 2,000 versus 20,000, or it can affect your interest rate between you paying a 3% or a 10% or 20% because you're in a high risk industry. So also, one last thing, it can depend on when you're trying to sell your business. That code can really play a part in that because, again, it's going to determine what industry you're in. So that an investor might not like the industry you're in based on your NAICS code. So we want to make sure that we choose the right code. Lastly, I would say properly structure your business. You want to make sure that you have a business checking account. I don't care if you've been in your industry for 10 years and you started your business on paper, filing with your LLC for 2 years. But if you haven't had a business checking account that entire time, technically, to most lenders, you're not in business. So we want to make sure that we have a business checking account. You can get a national bank account, such as American Express, Chase. You can get a regional like PNC bank or Truist Bank. You can get a community bank, banks that's in your community, or you can get a credit union like a Navy Federal, PenFed, whatever bank you want to get, but you need to establish a relationship with that financial institution, right? Get a business checking account. Now, after you properly structure your business, we're talking about the traditional route going, right? Before we get to the shortcut. So properly structure your business. Next, what we're going to do, we want to make sure that we add business credit trade lines. Not only vendor supplier trade lines, but what? Financial trade lines. Let me give you some examples of the difference. So vendors and supplier trade lines, you heard it, Quill, Granger, Uline. Those are all examples of vendors or supplier trade line, aka trade credit. You go into that establishment and they're giving you a line of credit with their company. That's essentially supplier and vendor trade lines. Now, financial trade lines is when you go into financial institutions and you get their products and services, such as a unsecured business credit card, a secure business credit card, invoice financing. What else you got? Term loans, business auto loans. These are all examples of financial trade lines, aka the banks love financial trade line because it tells them that you can manage debt. Are you tracking? So we don't want to create a whole business credit profile solely based on vendors and supplier trade line. That's not a good business credit profile. Lenders will frown upon that every single time. They want to see some diversity when it comes to your business credit trade lines. Most of those trade lines do not hold any weight with financial institutions, right? So that's based on the tier system I'm referring to. So if your business credit profile is solely based on the tier system, you want to make sure that you have some financial trade lines. Again, I go over this in my community too as well. Now, so after you've done that, properly structure your business, add the right business credit trade lines. Next, we want to make sure that our personal credit is still in position. Yes, the business owner credit needs to be in position. You probably thinking this, well, I want to separate my personal versus my business. Well, that's exactly what you're doing, because guess what? Although you're co-signing for your business, you, the business owner, is co-signing for your business to get business funding. I don't see what the big deal is, but some people see that's a big deal. If you're looking to get business funding, you need to co-sign for your business. Are you tracking? And those business accounts that you co-sign do not report on your personal credit profile. So you're still hiding your debt to income ratio. You're still hiding your debt to credit ratio, right? Because lenders do not see that you're in debt because it's on your business credit profile as opposed to your personal credit profile. You're just leveraging your personal credit profile. Are you tracking? So in order to get the bank's money, you have to leverage your personal credit. You have to give them something, is what I'm saying. So if you don't have good personal credit, you can have good business income and okay personal credit, but the banks need to see something. Your business credit profile going a traditional route cannot survive on its own. All right. So those are the three things you need to do in order to go the traditional route to build business credit. This can take you anywhere between, it just depends. You can build this off in 6 months or less, way less than 6 months, but a really good business credit profile may take 6 to 9 months to build out. Right. So all depend on the route that you take. Now let's talk about the shortcut route, because I know that's what you're here for. The shortcut route is very interesting. Here's why. Because you can do this, unlike with a new LLC where you have to build everything from scratch, properly structuring your business. No, the first thing you want to do when you're trying to take the shortcut route is to get a shell corporation, or AKA a age corporation. You can do this multiple ways. Number one, you can already have an LLC that's just lying dormant. So let's say we're in 2024 right now. You formulated LLC back in 2022 or beyond that, or maybe 2020 or 2018. You get the point. But you file an LLC. You've been paying on it every single year as far as the registration fee to update it, right? You want to have an active LLC, not dormant, but it's inactive. That's a big difference, meaning it's active on the Secretary of State. You pay that fee, whatever state you live in. It can be $80, it can be $200, $500, depending on your state. You pay that every single year, and now you're keeping that LLC active. But it's still an age corporation because there's nothing attached to it. There's a shell corporation because there's nothing attached to it. You just got that longevity, and guess what? Banks love longevity. They love it, right? So it's a big difference between you a brand new LLC and now you have a 5-year business. Totally different. Or a 2 years business, or 3 years, right? Anything under 2 years is considered brand new. So that's a total game changer when it comes to fundability and credibility. So that's one thing, taking a shortcut route, getting an age corporation. You can also purchase an age corporation, but be very mindful when you purchase an age corporation. Here's why. Although some age corporations might be inactive and lying dormant, but they will sell you that corporation regardless of it's not active. Because here's the thing. When you go to a financial institution, most banks can tell if you change the name. And believe it or not, if you change the name of your business, not a DBA, but if you change the name with your Secretary of State, some banks, I know PNC does in certain areas, will only give you credit from when you change your name. So if you had a business for 5 years and you all just automatically decided to change the name 6 months ago, now you only have credibility with that particular business for 6 months. This not all banks, but some banks will do that. So the same thing with a shell corporation. If you buy a shell corporation that's inactive, then all of a sudden, oh, it's active and it's been, now you think you have 8-year history with that business. It doesn't work like that. So be very mindful of that when you purchase in shell corporation or AKA age corporation. That's step number one. Step number two, after you get your age corporation, now you want to add business trade lines. But not only business trade lines, but age business financial trade lines. This means that you can purchase a age business trade lines with payment history attached to it. So let me give you an example. It's called a blended trade line, where let's say you have $100,000 on let's say it's a lease trade line, a business trade line. It's going to report to Experian Business, Equifax Business, Dun& Brad, Small Business Financial Change, and LexisNexis is going to report to those business credit bureaus, which is the main business credit bureau. Now, the Small Business Financial Change is really not a credit bureau, but a lot of banks, they are members of the Small Business Financial Change, so they definitely check that data. And they all primarily report to Small Business Financial Change. And other news, anyway, so we want to make sure that we have, let's say we purchase a trade line for $100,000. I'm talking about the value of that trade line is $100,000. And it's going to report to LexisNexis, LexisNexis, Small Business Financial Change, Experian Business, and Equifax. It's going to report to all of them. Now, depending on how long you've been in business, it's only going to report up to 2 years in business. So let me give you an example. Let's say your business only been in business for 6 months. Well, it's only going to report 6 months of payment history that is paid off. If you've been in the business for a year, it's going to report a year, 12 months of payment history. If you've been in business for 24 months, that's 2 years, it's going to report that payment history. Now, it's not going to go beyond 2 years. So if your business has been in business for 5 years, you're not going to have 5 years of payment history, only 2 years, because most lenders, if not all, only care about your last 2 years. That's what they always ask for, your last 2 years tax returns, right? Maybe 3 to 6 months bank statements. So maybe 2 paycheck stubs. They always only, and even when you check your personal credit profile, it only goes back 2 years, 24 months. And also with the new FICO 10T, the T stands for trending, that only goes back 2 years. So you get what I'm saying. Lenders primarily only care about for 2 years. So you're going to get that data. You're going to get good payment history for 2 years. And this is a financial trade line that you're going to add. It's a complete game changer. It's going to stay on your credit profile. It's going to stay on your credit profile forever. So unlike an authorized user, where if you purchase it from a third party, it's going to fall off between 30 to 90 days tops. But when you purchase a business trade line, and yes, we do have business credit trade lines with payment history in my private community. So that's another reason to join my private community, so you can have access to this information. So yeah, you can get a business credit trade line, a financial trade line with payment history. So that's the second thing you want to do. The last thing you want to do when you are building business credit, the shortcut route, is to have good personal credit. You still will need good personal credit, regardless if you have a properly structured business and a good business credit profile with all financial trade lines with high limits. Having a personal credit profile, and it doesn't have to be great, especially if your business credit profile is really established. Let me give you another example of this. Let's say you've been with Wells Fargo and you started a business, you have your shell corporation, you have your business credit, your aged business credit trade lines with payment history. And let's say your personal credit, let's say it's a 640. But they're going to take all that into consideration. And you can still get approved with a 640, 660 because you have a relationship with Wells Fargo. Your business credit profile looks great. Your personal credit profile looks okay. And you have a properly structured business, a business age that you have for 2 to 5 years or longer. So most likely they will approve you for it. Right. So we have to make sure that we take all that into consideration. Now, let's say you have a 700 credit. Oh, the sky's the limit now. The sky is the limit. So that's essentially how to take the shortcut route to get huge credit limits increases, or I say credit line of credit in general, to get lines of credit, to get credit lines, unsecured business credit cards. It's a huge way for you to leverage your business and your business credit profile and going to these banks to get high limit credit cards, or even to a certain extent, like I said, business lines of credit. Just depend on if you have other documentation to back that up. So let me say that too. Last thing with this shell corporation, if you're trying to get lines of credit, you're trying to get real big limits like $100,000 or $200,000, you want to make sure that you have tax returns and other things, bank statements, paycheck stubs attached to that. And then the sky's the limit. But that's how you take the shortcut route. You get an age corporation, you add business credit trade lines with history, and you have good personal credit, the sky is the limit. So now you can choose which way you want to take. Now, let me say this. If you take the traditional route, the long way, it's all about patience. It's all about time, right? So you're putting more time in it to build out a strong business credit profile. But if you're taking a shortcut route, you're going to put more money into it, more funding into it, because those business credit trade lines are going to cost you, right? It can cost you anywhere between 1,000 all the way up to 10,000 or more. It just depends on the trade line that you have. Also, the age corporation can cost you, right? That can range from $500 to $5,000. It just depends, right? So it's going to cost you, is my point. So if you're sacrificing your time and you just want to skip all that, then you're gonna have to put up some money. Otherwise, if you don't put up no money, you can't take the shortcut route, and maybe your personal credit needs to get fixed. So you're paying an individual or third party to fix your personal credit. So again, you have to put up the capital to get that squared away. Now, if you're taking the long term, it's mainly time. You might want to fix your own personal credit. We have AI systems where you can fix your own personal credit. Business credit trade lines. We have business credit trade lines that report to Experian Business, Equifax, and Dun & Brad. Right, vendor supplier trade lines and financial trade lines. Also, to properly structure your business, you might take the time, take a month to properly structure your business, right? So all that is just dependent on which route you want to take in order to put your business in the best position. Just know you have to give up something, right? If it's gonna cost you time or cost you money. All right, peace out, guys.